I can see that we're a few minutes early, but I have never, ever heard anyone ever complain that there was too much time for a blockchain panel. So I hope that's okay with our panelists. Okay, it looks like by their nodding their heads that shouldn't be a problem. So enough of me. I'd like to get everybody started in this in our final panel, which I'm really excited to bring to you today. And I'll hand over the microphone and the virtual podium to Sandra. Thank you.
Well, welcome everyone. And first of all, thank you so much to Michael and the team over at Columbia for organizing yet another amazing group of people to talk about some very important and timely topics. Let's dive right in. My name is Sandra Rowe. I'm the CEO of the GBBC, the Global Blockchain Business Council, and I am happy to moderate over the next 55 minutes topics including cybersecurity, blockchain, digital assets, and everything in between. So let's kick off alphabetically, just because that seems to be the easiest thing to do, with Robert giving an intro, and we'll just go across the line, and then we'll dive into the first topic.
Sure thing. Good morning and good afternoon and good day, everybody. Thank you for joining us. My name is Robert Farrokhnia. I have the privilege of teaching at Columbia Business and Engineering School. And also I'm the founding executive director of our Fintech initiative entitled Advanced Projects and Applied Research in Fintech. Certainly have a lot of interest in blockchain and crypto in general, and in particular around lately more so on DeFi and digital tokens for applications in finance and beyond. And I should say, I had the privilege of also being on many panels with Sandra, but this time around, Sandra, you're doing the hard work. You being the moderator, so I could just sit back and enjoy your intellectual input.
My pleasure. Fantastic. Well, thank you, Robert. And over to Josh.
Hi, thanks so much. I'm Josh Clayman. I'm senior counsel at Linklaters, which is a global law firm. At Linklaters, I'm U.S. head of fintech and head of blockchain and digital assets, and I'm one of our global tech sector co-heads. Outside of Linklaters, I love the industry and have been involved in it for years, like everyone else on the panel. I chair the legal working group of the Wall Street Blockchain Alliance, and I'm a member of its board, and I'm involved in a number of diversity-focused groups throughout the industry. So thanks.
Fantastic. Thanks, Josh. And over to Paul.
Hi, Sandra, and thanks for chairing the panel. Really flattered to be amongst such esteemed colleagues here today. And thanks to Mike and Keith for organizing such a great conference. Greetings from Colorado, by the way. This is my local background. Which, I escaped out here from New York in mid-pandemic. So one of the last major events that I was at in New York was the DFSO summit back in February last year. My background is I worked in international policing for 16 years. Eventually, before moving to the United States in 2019, I completed a master's in forensic computing and cybercrime, which kind of focused on the use of blockchain for digital forensics. At the time, it was all talk about smart contracts and recurring contracts. Nowadays, it would be effectively referred to as NFTs. Before, I didn't even knew what an NFT was. But it kind of got me down a rabbit hole, and kind of my background in financial crime investigation led me into the compliance and consulting world, where I've done consulting across the globe with groups in the Philippines, across the African continent, into Latin America. And most recently, I've joined a pretty impressive startup called TRM Labs, doing blockchain forensics and kind of helping to provide the guardrails for fairly growing and kind of interesting crypto ecosystem. So I'm really enjoying the work and the opportunities that I've had over the last 2 years, and really looking forward to having the discussion on the panel today.
Fantastic. Well, we could certainly use your expertise and insights, Paul, on this panel. So glad to have you. And over to Sunayna, I haven't seen in a very long time. So hello.
Hey, Sandra, delighted to see you. I think selfishly I accepted this invite just because I got to hang out with my friends again. So I'm delighted to be here. And as others have rightly mentioned, props to Michael and Keith for always powering through and hosting these amazing sessions. No pandemic can knock them off their schedule, which is very laudable. And, I'm delighted to be here on this panel. I have recently joined the Federal Reserve System as the inaugural Chief Innovation Officer. If you had told me that I would be working at the Fed in 2021, that was definitely not on my bingo card, but here we are. And it was a really, neat and logical transition. I think most of you who've met me before or have worked with me, I've led pretty much my entire career, leading change and innovation at the nexus of finance, technology, and policy. Have had a lot of different assignments ranging from operator to builder to investor, both in North America and in Asia. But my underlying mission has always been around how do we use the power of these frontier technologies in a way that we're breaking down barriers that continue to persist in financial services, right? And the policy component has always been an important part of that trifecta, because as you all know, when you are trying to commercialize these new technologies, you're doing it without a playbook. You're kind of building the plane as you're flying the plane. And so working with your BFFs in legal and compliance and your regulatory community from the get-go is an imperative. So while I've had the pleasure of working with all of our regulatory friends, the step of now being part of that community has been an interesting change, but it's been an amazing experience kind of moving from industry to the Federal Reserve. And I'm delighted to be here to share my perspectives today.
Fantastic. And, it's a very different move, Sunayna, but the fact that you've got the private sector experience as you do, and now to be able to lend and share that and incorporate that on the regulatory Fed side, I think is just a boon for that side of the fence. Let's kick off with our first subtopic. And we're going to talk about blockchain technology in the context of digital financial services. People talk about fintech all the time, and we all know that fintech covers many different areas. But with respect to blockchain technology, I'd love for us to start off the conversation around some of the different challenges of incorporating blockchain technology and fintech with respect to developing countries versus developed countries. I wish we had better terminology, but let's stick with that since most people tend to know what that means. Robert, if we could go over to you, could we get just some opening thoughts on how the technology unfolds in a developed versus developing country scenario and your thoughts around that?
Sure, be happy to. It used, if you go back to the past 10, 20 years, probably even longer, the notion of innovation in finance in developing countries typically entailed a number of entrepreneurs or executives from a bank or local community come to a developed country, let's say US, kind of observe what we are doing here and go back, copy, emulate it, customize a little bit for local customs and habits and consumer habits and so on. And then you have kind of this transfer of innovation, if you will, from developed countries to developing countries. But over the past number of years, especially as technology started proliferating beyond the back office, with the advent of smartphones, certainly we all have a computer in a pocket that has a camera and GPS enabled and so on and so forth. We really saw something interesting, and that is a bifurcation of the development of what I call native innovation in developing countries. That's very different what we see in the developed countries. And in a number of instances, not only they surpassed us in terms of capabilities or things they could do on the ground there, but also you're beginning to see really truly innovative ideas. So in my mind and in my humble opinion, we're beginning to see different universes of innovation in fintech. Certainly, if you go to China, or you go to different parts of Asia or Africa, you see people interacting with banking and finance in general very differently than we do it in the States. And the pandemic kind of, especially on the developed country side, accelerated this move toward more innovative approach toward banking. The pandemic brought forth some of the major structural challenges and issues we had, from underbanked to not too much use of digital, banking, if you will. Lots of developed countries, look in Germany, Europe, cash still used to be the king. But all of a sudden, almost overnight, people had to adapt and move toward kind of a more digitally driven financial services. So we saw this kind of not only diversification, but also explosion in innovation across the globe, and certainly with the advent and broader studies and applications of blockchain, or at least experimentation with it, we are seeing even more widespread innovation that comes about. People are innovating in all parts of the world, and we are kind of learning from each other. So no longer the innovation flows from developed countries to developing countries. You all have to take a kind of a humble approach and learn from pretty much everyone, because we have certainly no monopoly on good ideas. Now, obviously, in terms of blockchain in particular and financial services in general, there are other dimensionalities to it, regulation being a big issue. So you might see certain jurisdiction arbitrage play out, where certain jurisdictions may want to promote kind of a faster or more accelerated innovation, but providing the right legal framework or the regulatory policy framework, sandboxes, and so on, that might bring about more innovators. Obviously, the issue is a lot more complicated, because you also need to have the ecosystem of investors and risk takers in terms of venture capitalists, and a healthy pool of talent, technical talent and business talent, and many other issues. But it's really diversified, diffused throughout the world, and I think it's a very exciting times compared to my peers who started looking at innovation in finance 20, 30 years ago, which at the best was confined to the back office. But nowadays it encompasses pretty much every aspect of how consumers interact with financial services and banking and payments and remittances and so on and so forth. Long way to go, lots of problems we need to solve, but I like to take an optimistic approach about the power of innovation and hopefully addressing them in a responsible manner, so we can also address some of the issues of diversity, access, inclusion, and so on and so forth.
Thank you, Robert, for that. I think one of the very, very important points that he's just made is around the explosion of innovation around the world. And it's no longer just a Silicon Valley or a New York or London innovation that's happening, but actually pretty much any country you go to. In the former days when we all used to travel, we could meet people who are actually innovating from all corners of and walks of life. Josh, I think we'd love for you to pick up on the conversation around, you've been in this space for so long as a veteran, watching crypto and blockchain evolve. From a regulatory perspective, please share your thoughts and thinking around how will regulatory regimes change or shape the way we innovate around the world. Have we lost Josh? Perhaps. We're gonna.
She could be frozen.
Yeah, I think we have. All right, we'll come back to Josh. But Paul, since I got you on the mic. You've obviously worked with developing nations as well, from a cyber and the forensic work that you've done. Can you share some of the innovations that you've seen and how you see blockchain technology shaping developed versus developing nations?
Which I've seen a lot of a wide variety of things. One of the most interesting projects I've been involved with in the last couple of months is the FATF guidance, which obviously dictates what guides where we're going with regulation across the ecosystem, and how they're still trying to shoehorn a centralized system into a decentralized world. But that is kind of leading to its own set of innovation, or with companies like ours who are providing the transaction monitoring and which are the kind of the tracking of illicit activity and everything like that. As Robert mentioned, these opportunities lead to innovation across the globe. And one of the things that I found super interesting last year when I was doing some work in South Africa was how most of the African regulators had issued advisories on crypto back as far as 2013, 2014. And it was generally the advice of buyer beware. We're not going to be providing regulation or the guardrails to secure consumers because it's not a fiat currency and it's not our remit to actually have to worry about this. If you actually want to get involved in crypto, it's at your own risk. And the justification in one of those advisories was that at the time, the total market for Bitcoin was 8.2 billion. And that it was their estimation that it was going to be a bubble and it was going to disappear into the ether in a couple of years, and nobody was ever going to have to worry about it or ever have to worry about it, regulating it. And by the time I was actually giving the talk in August last year, the total market value of Bitcoin alone was actually equal to the GDP of the country that I was giving the talk in. And it multiplied by 4x that by the end of the year. So it's interesting to, and having had conversations with regulators in that jurisdiction afterwards, it's interesting to see how quickly regulators and across the globe are beginning to sit up and take notice and actually say, okay, well, what are we going to do about this? And how do we actually manage this? And as Robert also alluded to, like the sandboxes and the regulatory kind of work that's been put out there, and particularly the FCA and the NYDFS are doing some great work to kind of think outside the box and come up with solutions that can help to kind of shift the focus away from the centralized system to a decentralized solution-based approach. One of the things that I really appreciated was the NYDFS tech sprint that they had earlier in the year, where they got different players from different companies in together to work together to come up with interesting solutions. And one of the things that I'm seeing from being part of industry groups in West Africa is that people are actually also trying to come up with local solutions in those regions as well. And it's, from my perspective, coming from Ireland, which is a small open economy that's heavily impacted by global affairs, it's important for these developing countries to come up with local solutions for their local challenges, rather than just, as Robert as well alluded. I feel like Robert took all the good points, or if I go first.
Always the advantage of going first. I'm kidding.
But he kind of pointed out that historically, people would come to the West and the stronger economies, find a brilliant piece of technology and bring it back home and kind of map it into what would work locally. And nowadays, like with the likes of M-Pesa in East Africa, you see that some of these jurisdictions aren't waiting to see what's coming from the West. They're going to come up with a solution locally. And that's one of the things that I'm super excited about within the crypto ecosystem, how things are developing in other parts of the world that people in the West haven't even thought about yet. And which it's kind of becoming more of a two-way street in what I've seen.
Yeah, absolutely. And Paul, you make some excellent points around the private sector, public sector partnership collaboration that's on the rise globally, as well as innovation coming directly from nations that typically weren't known for innovation and could actually teach particularly countries like the US. And I'm going to turn to Sunayna now. You sit in a very unique position as someone who is the chief innovator inside of pretty much the largest and most significant, purveyor and guardian of the reserve currency currently. How do you see your role and some of the challenges and opportunities for the Fed. And we know you haven't been in the seat for too long, but you must have some views.
Yeah, thank you, Sandra. And I think some of the points that were made earlier definitely resonate, both while I was in the private sector, but now also that I'm in the public sector, right? And, one of the, there's a famous quote, I think it's Jim Barksdale in the early days of Netscape that he came up with, and he coined something that went like, there's really only two ways to make money in business. You're either bundling or unbundling, right? And it's such a interesting mental model when you think about the landscape of fintech, as the other panelists have rightly mentioned, whether it's classic fintech or the crypto side of fintech, that we're seeing a lot of that unbundling and bundling happening in some ways at the same time, right? We see a lot of crypto companies that maybe started with one very niche offering, now starting to expand their services. And in fintech or in banking, we're seeing, what used to be the traditional bank, where it was an amalgamation of all services, now really unbundling with all of these really interesting players kind of pop up, right? So I think that's an interesting view of the landscape that I might maintain. And you think about, why are we seeing this activity, right? And largely, number one, it's undeniable, just the volume and velocity of new technologies that are coming our way, and the impact that they're having both in our professional and personal lives, right? We can all attest to that, especially after the last 18 months. But I think the second thing that I really obsess about, and I think I'm bringing that obsession in my new role, is really the client centricity side of it, right? Yes, technology is largely the enabler and accelerator of a lot of these trends. But what I find fascinating, and what I learned in kind of leading transformation in the private sector, was a lot of it was actually also driven by consumer behaviors and preferences, right? Because consumers, we use this notion of liquid expectations, which is consumers are kind of assessing the landscape of their life, and they're going, wait a second, every aspect of my life is digitized, simplified, frictionless, on demand. But when it comes to financial services, why am I putting up with this unnecessary opacity or complexity? I want the same level of transparency and on-demand self-serve option. And, frankly, consumers don't care that financial services or even healthcare is regulated. To them, it's this notion of liquid expectation. If ordering a pizza can be a 3-step process, and I have full visibility of where my pizza is every step of the way, I expect the same when I go to open an account at a bank. Right now, that may seem cheeky, because ordering pizza and opening an account are two very different things, but you put yourself in, you look at it from the lens of the client, and you kind of go, well, should it be, right? Like, it's about creating those delightful, simple experiences. So I think, that's, and, I like the point that both Robert and Paul also made, which is, I think for a very long time, we operated in this notion of, oh yeah, we innovate in the US and then we export that innovation. And that has very quickly changed. And I think it behooves us as innovators in the US domain to be very cognizant and almost approach it with a sense of humility. In my last role, I spent a lot of time in Asia, investing in Asia tech and working with partners there. And I would often quip that every time I came back from China back to the US, I feel like I was going backwards, because as all of you know, in mainland China, Hong Kong, Singapore, your phone is all you need. Like with super apps like WeChat and Alipay, you can literally do everything that you need to do with your phone. And then I was like, wait, you come back stateside and I have to take this plastic thing out of my wallet and I actually have to sign on a piece of paper. Like, it just seemed like I was going backwards. So I think, those three things, it's the acceleration of technologies, it's the change in consumer behaviors. And I think it's also this recognition that, innovation doesn't just start in our ecosystem, it's happening around us. And in several countries, it's leapfrogging, and it behooves us to kind of, stay on our toes so we don't find ourselves on our heels kind of mental model. And I think all of that definitely applies, within the construct of the Federal Reserve System. My anchoring heuristic around innovation has always been threefold. And it can sound contrarian, because I often say innovation is agnostic of technology. Yes, technology is an important accelerator, but it doesn't need to start with technology, right? And for me, that anchoring heuristic around driving innovation has always been, number one, are we solving gnarly problems, right? Problems where there's a lot of friction, where there's unnecessary complexity, like those are always ripe for transformation? Second, are we solving those problems and shipping value in a way that matters to that end consumer, that end user, really myopically thinking about it from that, a client-centric perspective? And then three, whether you're in the private sector or the public sector, how are you helping to future-proof your business, future-proof your institution, right? Just because you've been dominant for decades doesn't guarantee that dominance for future decades. So I think that anchoring heuristic, which really helped us lean into new frontiers in the private sector, is something that very much applies as I'm, kind of starting to get traction in my new world within the public sector.
Thanks very much for that. And you've said some pretty critical and poignant things about the way we need to be more open-minded. And frankly, also from an American standpoint, I would agree with you, humble about the fact that innovation and great ideas are coming from all over. The one other thing I would like to add before I go over to Josh to ask her about from a regulatory standpoint is really around the collaborative nature of blockchain technology, which confounds a lot of people's business models where it's a zero-sum game and I've got to go kill all my competitors in order to be the winner and the victor. That mentality is something that actually is being challenged because blockchain technology actually requires sometimes the co-opetition model, which is you are competing, but actually at some level you are also cooperating. I think we'll talk a little bit more about that, especially with respect to cybersecurity in a bit in our next subtopic. But I'm glad we've got Josh back. Hello. Could you please provide us some insights from your side related to the regulatory landscape regimes that you've seen over the years? There's clearly been a few countries that have had more clear frameworks around their thinking around digital assets and blockchain, as opposed to others, develop versus developing. Would love to get your thoughts, Josh.
Thanks, Sandra. And by the way, I just want to, this isn't exactly regulatory in nature, but I think this bears mentioning. I mean, what happened to me, my internet shut down here, right? So I had to use a phone and call someone to have a link sent to a different email address so I could call in from my phone. I think when we're looking at developing versus developed nations, I mean, arguably we're in a developed nation, right? And still, you have to worry about, does your infrastructure work? How reliable are the systems and things like that? And so I think, as we think about all the possibilities, and my apologies, I missed the other answers in large part. So I don't know if this has already been said, but just thinking about as you develop an exciting plan A, what is your plan B? And how will people still be able to access the kind of financial services and other services that they need if plan A goes down? So just something to think about. From a regulatory perspective, I mean, certainly you're exactly right. Many different countries and jurisdictions have taken different approaches, and some have presented themselves as being places where, digital assets, they would like them to find a home and they would, are very friendly to them. I think one of the important things to think about too is a lot of times governments, including, generally speaking, many of our regulators, they say that they're technology agnostic, and they try to be. But as we develop technology that relates to financial services, there are many crossovers with existing law, particularly in the US. So as we think about decentralized finance and things like that, I think it's very important to remember that regulators, including, for example, the US SEC, they will look at the individual offering, the individual service being provided, the transactions, to see, does something look like a security and its facts and circumstances. Whereas in other countries, as you alluded to, there may be a much different kind of framework where it's not principles based, where you actually have a very prescriptive instructions about what you can, cannot, and must do. Right. So I think there's a wide variety, and I think the global nature of financial services, and, I think that is something to bear in mind if you are innovating in the space, is that you have to remember the regulators.
Yes, absolutely. And that's becoming more and more on the fore especially in the US, as we've seen in the last few weeks, months of activity. So I want to ask if Robert or Paul or Sunayna, do you have any final comments? I do want to move on to talking about cybersecurity and blockchain technology as another subtopic. Any more comments around sort of the developed versus developing nation fintech evolution?
I think Joshua actually raised an interesting point around the actual frameworks for regulation, and like one of the things that I experienced when I was part of international policing was the different legal frameworks that you're dealing with make it difficult to apply the same rules across different jurisdictions. So what is useful in common law systems might not be useful in an inquisitorial system, and would probably be very different in a Sharia law system. And it's one of the things that's interesting about the crypto ecosystem is that the rules and regulations that apply are the code, and the code is the same regardless of what jurisdiction you're in. And it's interesting to kind of think about how an ISO standards approach to compliance may be a more practical approach going forward, rather than centralized regulator perspective. At least if you have ISO standards on the code, then you can actually tune your regulation based on what's available within the actual ecosystem. But yeah, that was an interesting point from Joshua.
Thanks very much from that. And the both of you have actually raised another point we'll raise a little bit later in the third subtopic, but around standards and how do we actually normalize or come to some sort of consensus globally, which is very difficult, regulatory and otherwise. Robert, any final thoughts? Otherwise, if you could give us some of your intro thoughts on where we are with respect to cybersecurity insofar as there are folks who now associate crypto with ransomware. There's questions around blockchain technology and not enough auditing and actually critical eye on the cybersecurity piece for the infrastructure layer. Just appreciate your thoughts
Sure.
to this subtopic.
Well, let me highlight first something, Sandra, you actually mentioned, and that's the collaborative nature of innovation, especially in the blockchain domain. Blockchain is a fairly complex technology, requires expertise in many, many subfields, from encryption to cryptography to systems to networks and so on and so forth. So I would humbly submit there are very few people who would truly be expert in all of them. I know people who spend their entire lifetime just one subset of any of those domains. So this notion of collaboration is even more important, and through many lenses and filters, meaning that, I collaborate with other academics like myself, but then, there are people in different subfields. Then there are the regulators, policymakers, practitioners, innovators, entrepreneurs, investors. So really, and this whole industry is evolving in such a way that it's very diffuse. So it's very important to be in the ideal flow of things in general. And part of it comes from just talking and collaborating with others. And then to your point about cybersecurity, certainly if we plan to scale blockchain beyond early adopters, and which I think we are kind of exhausted the pool of early adopters at this point, and we are getting closer and closer to broader adoption, and hopefully we can quote unquote cross the chasm and get to mass adoption at some point sooner rather than later. It's is a challenge we have around keeping things secure, especially because you're dealing with a decentralized system. You can't call up someone to reverse a transaction. And I do believe that this the Colonial Pipeline attack that we had, probably I would consider it perhaps a seminal event in which this became forefront and affected people in a direct way. You had lines at, whether rightly or wrongly, we had lines at gas station, and people realized, oh, wait a minute, an attack at a company I've never heard about is affecting my life right now. What's going on? But it's a very complex issue, and it comes in, you have to tackle it on many different layers. One, just good cybersecurity practices, backing up your data, ensuring that you have good systems in place to prevent that. But obviously with that comes complexity, comes cost, could all companies, support such system infrastructure and cybersecurity teams internally? Where are you going to find the talent to do that? And who's going to say what company is critical versus not critical? Again, who knew that a colonial pipeline is going to be such an important, people perhaps in the business knew, but not the general public.
Right.
And sadly, the way this cybersecurity is evolving, the notion of cybersecurity is evolving, is putting, rightly or wrongly, putting the entire crypto blockchain space under a bad light. And it being used for ransomware, as Sandra, you mentioned, kind of highlighting the bad practices, the things you could do with crypto in a not so favorable or good way versus all the other potential of it. And I feel that that might be something the industry as a whole we need to work on and highlight. I always say a knife in the hand of a surgeon can save a life, in the hand of a deranged lunatic can take a life. It's the tool, not the how we apply it, not the tool. So can we create the right frameworks, regulation, whether self-regulated or policy mandated around this? And as we move more and more toward our life being dependent on digital tools, can we create the right mindset and habits in people to take cybersecurity more seriously? Think about the very simple and yet fundamental challenge in moving people from using passwords to passphrases. I'm not talking about, biometrics or, two-factor authentication or using hardware authenticators like YubiKey and so on and so forth. Just purely change a little habit, and yet that's very complex. We know that changing human habits is very hard. So this is yet another one of those multidimensional problem. And, Sandra, you talked about it. Here we need to look at it from a technology perspective, from a sociology perspective, human psychology perspective, behavioral perspective. But it's critical as, again, we move into this world of more and more digital interactions with not just, finance, with pretty much everything, and the challenge of cybersecurity that comes along with it. I've yet to see my final thoughts. I've yet to see, perhaps with one exception, a software, a piece of code that's just truly bulletproof. Software is written by humans, and there's always someone, more creative or inventive out there who figures out a way to take advantage of a flaw or some obscure, hole in the code, if you will. Absolutely. So, what can we do to rely on the combination of humans and machine to increasingly fortify how we interact with digital world? So that's my 2 cents on the topic. Would love to hear other panelists' thoughts as well.
Absolutely. And because Paul was in enforcement, we want to also tap into his expertise. But before we do, I'm going to go to Josh, because there's something that came up right before the pandemic really kind of took hold. I was at a conference with the American Bar Association last year in February, and we talked about cybersecurity and law. Why? Or law firms, I should say. Why? Because law firms hold honeypots of data. And the honeypots of data often have very sensitive, very critical, and very confidential and potentially damaging information if it goes into the wrong hands. And there were several attacks in the last 2 years where it crippled mid-sized level law firms to the point where they just literally had to pay out the ransomware. And there were a bunch of insurance companies that walk through what you're supposed to do when that happens, et cetera, et cetera. That's just triaging the problem. So the question I have for Josh, who's at a large law firm, is how much of a cybersecurity topic do law firms talk about with respect to priorities of importance? And then also, how do you see it from a crypto perspective or from a blockchain perspective? Kind of 2 separate questions I've got for you, Josh.
Sure, thanks. So I can't speak on behalf of my law firm. I can speak about my specific experience, which is that we've had many trainings focused on that. There are a lot of procedures and policies in place. We have specialists in that area as well, lawyers who focus exclusively on those type of questions and who are great resources inside of the firm as well. I think also, just generally speaking, in the past several years, demands coming from clients such as large banks. I think this goes across law firms, so I'm not speaking specific to mine, but have required changes in different policies, including document retention. Making sure that certain things are deleted and gotten rid of in a timely
Right.
manner. Everything down to the printers, right? Where you may need to have a card to be able to print and you need to pick it up at that time as opposed to leaving things on the printer. But yeah, I mean, I think I would have to imagine that many large firms right now, if they hadn't already been, are highly focused on this in a very granular manner, including instructing, like, should you be taking these documents home, and how should you be transporting them? When do you shred them? Where do you shred them? Things like that. I think this all into data privacy. So certainly when you think about the laws around the world and GDPR and things like that from, Europe in general, depending on the types of matters and the geography of your practice and the folks who are involved, you may have a lot of things to be thinking about in terms of, personally identifiable information and, what you can even, when you can even contact clients, what you can save information on. So that's a long-winded way of saying, yes, I think this is a major focus, not just of law firms, but of their clients. And I think that's continually driven home. From an outside of the law firm perspective, what I would say is for the past few years, at least in my experience, many companies, particularly large companies and particularly often technology companies, have been concerned at the board level about things like cybersecurity and ransomware attacks. And I'm not a specialist in cybersecurity or crisis response. However, I do know that there are people who are, and that it's very important to have a plan in place about communications and what will be happening. I think for public companies in particular, there are a lot of concerns in terms of, for example, even just basic things. Say you're concerned about a ransomware attack and you begin to buy Bitcoin, right? And that's not what you do. It has nothing to do with your business, right? When do you have to disclose that? What's a material amount? Is it material just that you're doing this? And when do you need to communicate to authorities? When do you need to communicate to shareholders? What do you need? What is your communications process both within and outside of the company? I think it's really interesting, some of the legislation that's been proposed recently in the US, and also, things at the executive branch level and at the legislative level, including, for example, with federal contractors and others providing critical infrastructure, proposed bills that would have those companies with a federal nexus be required to notify Department of Homeland Security and to give updates, I believe, every 72 hours until a breach is mitigated. I mean, things like that, having that be mandated, that would be a much different kind of world than perhaps we have in the US now. But I think these attacks have exposed more and more the need for protections and the need for having a plan in place.
Yeah, you make an excellent point. Just to even have an action plan is something that maybe some firms don't even have today. And frankly, they really need to. Sunayna, you worked at a very large regulated financial institution, and now obviously you're on the government side. Could you just share with us, cybersecurity is obviously a priority, but how is the government working with private sector to make sure that that communication flow is happening? Because there are things that government agencies can do to help. And Paul, we're going to round out with you because I've got a question that's been directed that I think is actually for you. So we'll end with your thoughts from your side. But Sunayna, please give us some thoughts from a government, but also the fact that you worked for a very significant and critical infrastructure, I would imagine that you guys were categorized as. From a financial institution standpoint.
Yeah, I'll use Josh's legalese there that these are my opinions and don't reflect the opinions of all of the Federal Reserve System or the agencies. Right. I think this is such an important and timely topic because, I would reflect back to Sandra, like you think about the delta between cybersecurity being nice to do versus need to do, and how much that has closed just in the span of the last few years, right? In the private sector, you're right, like cybersecurity was always top of mind, right? but you think of the intensity and how pervasive that is today, even compared to a few years ago, that's really ticked up, right? So part of it is, okay, it's the sign of the times, right? As society and economy becomes more and more digitized, it makes sense that this is just foundational hygiene need to do stuff, right? And I think we've obviously accelerated our transition into the digital economy and everything we do being digitized. So part of that makes sense, right? But I think the other part of it is also just the heightened awareness and also the recognition of the impact of these events, right? You know, sure, there were cyber events back in the day, but the impact was lower, or the number of people who really were attuned to it was pretty finite. And to some of the examples that were shared earlier today, the impact is massive. And everyday Main Street consumers, you know, to the example of the Colonial Pipeline that Robert rightly attested to, is you feel it, right? Like that cyber attack leads to gas lines. Like there's a direct line and there's a direct impact to you and me, you know, as consumers, without, you know, we don't even have to be in the crypto ecosystem, but we feel the impact of it, right? So I think that those things really notch it up. And I think the notion of private-public partnership is really important because, you know, no industry, no category operates in its own silo anymore, right? Everything we do is interconnected, right? In the clients we serve, in the businesses we run, in the infrastructure that we use. So I definitely agree that it's a shared responsibility, and it can't be, oh, we are going to do it this way and we're going to do it this way and we'll talk when we need to. No, it has to be, I liked your term earlier, that collaborative, co-opetition type mindset that, you know, if we don't all work together, that in itself becomes a risk vector, right? Like that could be exploited. So I think that's important. You know, I think it's specific to crypto. One of the reasons I loved getting into crypto back in the day was, if you're curious, there's no better place to be than in the crypto ecosystem, because it's just super multidisciplinary and you're always learning. I often joke, if somebody walks up to you and says, hello, I'm an expert in crypto, you should run far and fast, because nobody's an expert. Like even the people who are legit experts, or we would deem them to be experts, are the most humble people who are like, I'm still learning. This is all new, right? So I think the cool thing about this is we're building, we're learning. This is all really only a decade old, so we're figuring this out as we go. But I think the flip end of it is there's no playbook for these things, and we have to figure these things out. And I think specifically with blockchain, what's fascinating is the diversity of use cases that we've seen come to life just in the last few years, and I would argue even in the span of the last 12 months. And, you know, it reminds me of that adage of, you know, slowly at first, then all at once. Like there's people who are awakening to this notion of blockchain and crypto who are like, hey, that just came out of nowhere. I'm like, no, it didn't just come out of nowhere. It's just like, it's just finally kind of grappling people's psyche with some of these use cases. But I think that behooves us as innovators in these new technologies to, again, take a very purposeful and pragmatic and prudent approach, right? And why do I say that? So number one, I think you have to be purposeful with any technology, especially with crypto, you know, to the point that if it gets branded and associated with ransomware, then that's the use case that people are going to associate it with, right? So you have to be purposeful in kind of advancing use cases and demonstrating to people, no, this technology is actually solving these problems and solving it in ways that have never been solved, and this is why it matters to you, right? So it gives it that meaningful purpose. But I think the second thing is we all also have to be pragmatic. Yes, these technologies, especially blockchain, are very powerful, but they're not a panacea, right? And we see that even with AI and machine learning, right? There's a lot of great value we've seen in commercializing these technologies, but you have to be cognizant of the flip side of it. You know, we've seen bias in AI and we've seen some of those use cases. So I think recognizing that they're not a panacea and planning for those contingencies, as Josh did with her internet, right? Like what's my plan B and my plan C sometimes? Right. But also I think being prudent in saying, if you are in this ecosystem and you're building in these ecosystems, it can't just be about chasing shiny objects anymore, especially when you're building for scale. From the get-go, you have to be mindful and you have to be building for operational resiliency and for security. Because if you don't, great, you built a great shiny product, let's say, and people are adopting to it, but the first instances where there's issues with operational resiliency or security, you're gonna lose that advocacy from your consumer base, right? So I think that notion of being purposeful and being pragmatic about the power of these technologies, but also being very prudent and planful in kind of a scalable implementation is how I kind of think about some of these things in the context of cybersecurity.
Thanks very much for that. And you said some pretty powerful things. And frankly, the cross collaboration and communication and also firms not being ashamed if they are attacked and they are hacked. That used to, I think, be a cultural issue as well. People just kept it quiet and buried, and then didn't want to advertise it or not communicate externally because somehow it would be negatively reflective. But we're in a state where everyone should just assume they're being attacked or hacked, or attacks are happening. And so, Paul, I'm going to hand over to you because there's a great question here from the audience about, well, bad guys now probably know that blockchain is traceable. Do you foresee that ransomware attacks and payments demands from victims will be switched to other means? I'm paraphrasing here, and not using cryptocurrency as people realize, hey, wait a minute, I can be tracked and caught, and then my crypto also captured, and maybe it's not such a great means.
I don't think we're going to get to the point where they're moving away from crypto altogether. I think that one of the things you see in cybercrime is that criminals just get smarter about their layering processes and their obfuscation processes. They may move away from the likes of Bitcoin and that, because that's obviously something where we've got fantastic tools around clustering and everything like that. But they'll just move to a more kind of privacy-friendly form of cryptocurrency. And the reason for that isn't because the financial institutions that are dealing with fiat are any less efficient or any better at hiding their identity. It's simply the same reason that everyone else uses crypto. It's more efficient. It's programmable money. You can actually do an awful lot more in an awful lot shorter time. And once the transaction goes through, it's not reversible. So that's kind of ideal for criminals, the same way as it's ideal for business people. And effectively, the way I view criminals is kind of from the follow the money perspective, where you treat them as business people as well. Like the underlying motive behind most of these crimes is usually financial. But to kind of go back to a point that Robert made, and it's actually an Einstein quote, that technological progress is like an axe in the hands of a pathological criminal. Just because the axe exists doesn't mean that was its main reason. And then with crypto, crypto wasn't designed for criminals or for ransomware. And another quote, actually, which I absolutely love, from a colleague of mine, Nick Furneaux in the UK, is that there's no such thing as crypto crime. It's just financial crime, and cryptocurrency is an element of it, and it's a tool that they use in money laundering and counterterrorism or terrorism financing and all this. But that's not the actual the crime area. Like they're either money laundering or they're terrorist financing, and crypto is just an element of it. Same way as the axe may be used in any range of crimes, but it's not axe crime because there's no such thing really. So realistically, I think that to go back to the question, I don't think we're going to see groups move away from it. I think that they'll get smarter at obfuscating their activity and kind of obfuscating their identity, and that's where companies like ours kind of are building the tools that can help to unmask that. One of the major challenges I saw in the ecosystem before I ever jumped into it was that knowledge barrier to entry for investigators like myself back in 2016, 2017, when the likes of Chainalysis and those were just beginning to come on stream. And as we saw the ecosystem develop and the cyber criminals develop their skills, they began to kind of try and counteract the effects of the likes of chain analysis and cipher trace and everything like this. And we're all of our industry is having to evolve and identify the new trends and the typologies and everything like this. And one of the things that I'm really appreciative of within the blockchain forensics industry is that we have some really great companies out there, and that market competition is good for innovation, and it forces us to kind of improve our tools week on week and year on year to make sure that we can keep up with both our competitors and the criminals that we're looking to catch. I think that as things develop, we're just going to be looking to innovate at the same rate. And one of the things that is great about being with such a lean and kind of knowledgeable group that I'm working with at the moment is we're able to iterate super quickly. And that's one of the things I'm really loving about the ecosystem, about how quickly things evolve from the technological perspective, and how even in the couple of months that I've been with TRM, our tool has improved dramatically. And it's fantastic to get that feedback from customers. And it's actually one of the things that Paul Graham actually from Y Combinator kind of mentions here. If you do stuff that is customer focused, and I think Sunayna actually alluded to it with client centricity. If we have a client-centric approach to innovation in the ecosystem, we will be able to develop tools right now that don't necessarily look like they scale, that will hold their value in the long term, because we did it when there wasn't that many people in the ecosystem in the first place. It's a lot harder to make these fine-tuned kind of innovations when you're dealing with hundreds of millions of customers, because at that point you're looking to identify or address the mass requirements.
Right. And I think Josh here has some points to make around the topic, so appreciate it. And for those who do have a hard stop, we thank you for joining us, but we are going to go a few minutes long because we want to round out the topic with a final thoughts around the regulatory gaps. So I do want to end up with talking about what we do in the future. So, but Josh, please, your comments around some of the topics that Paul was, or subtopics that Paul was talking about.
Sure. Thanks so much. So I actually, a few years ago, had thought that there would have been a move. I remember thinking distinctly, oh, maybe this will move from Bitcoin to some sort of privacy coin. And at the time, I recall calling up certain OTC desks just to see, like, you know, how would one, if one were a company that wanted to purchase a certain amount of some kind of digital asset that isn't Bitcoin, how would one go about doing that? How long would it take? How much would it cost? And, you know, I think one of the big challenges was just how, at the time at least, how broadly and extensively they were traded, right? It was a liquidity issue as much as anything else. And so that was really interesting to me when you think about like the tranches in which, you know, say Bitcoin might be fulfilled versus some other more thinly traded digital asset that might have enhanced privacy. I'm not encouraging in any way attackers by any means, nor is any of this legal advice or investment advice. It was just something interesting that I thought from back then. I do think also just another quick thing to think about is, what is the motivation? Do all of these attackers always want to be paid? Do they expect to be paid? Or are they trying to send a message? Like if you look at, for example, the Poly Network hack recently, where they did it for fun, right? And then now whether they will accept this proposed reward bounty of 500,000, or whether I think I read something this morning saying they might be willing to pay it to others who identify other vulnerabilities. Certainly not encouraging that, but I think as we think about why certain companies and their data may be exposed, there may be an element that goes beyond actually receiving the reward and more just causing the havoc or, potentially exposing the data or embarrassing the company. So just things to think about.
Absolutely. There's a lot of different motivations for why hacks happen. And for those who aren't familiar with the Poly Network situation last week, was it, I believe, $600 million was the largest crypto hack in history thus far. But the very fact that it's being quote unquote returned and these are friendly hackers is a very also unusual and interesting situation to follow, because behind these attacks are actual people most of the time. And frankly, there's a human psychology to all of this. Before we round out this session, because we are a little bit over, I want to get your thoughts on a very important topic, which is the future. So we think about the future of many of the things that we just discussed. We still have gaps from regulatory, technical, lots of different challenges. I'm going to go and start with Sunayna this time around. What are some of your thoughts around things that you think about as you evolve your role at the Fed and also in general for the industry? How do you see, what are some of your thoughts around the immediate and sort of longer term future?
Sorry, the mute. Good thing I'm not an innovation officer or something, because sometimes I can't find this AV stuff. But listen, I think going back to some of the earlier comments I shared and that others have talked about, I think we live in amazing, exciting times. One of the things that I used to bemoan about as a kid was, oh my God, all the good stuff in the world's been done. The internet is here. We've gone to space. What's my generation gonna do, right? So good thing I was completely wrong about that, because the future has proven to be very, very interesting. And there's no shortage of new technologies and the capabilities of these technologies that we as innovators and operators and builders can be harnessing. As I think about it in my current role as a chief innovation officer, I again go back to the first principles of, are we chasing technology for the sake of chasing technology? I used to joke, is it innovation theater or innovation petting zoo? Because that never yields anything important and meaningful. In fact, it often gives innovation a bad rap, right? Because people are like, what am I getting for this stuff, right? But I think if you really anchor yourself in what are the problems that need to be addressed? And guess what? In financial services, there's no shortage of problems that, we've been kicking the can on, and that, also consumer preferences have changed that we really need to be evolving and doing better on. So I think starting with what are those gnarly problems that we should be solving, and then applying the appropriate technology, right? Like in my past life, when I did venture investing, especially when we go through these peaks of euphoria in the blockchain space, every company that's pitching you is a blockchain. And I'm like, wait, why do I need blockchain for this? It sounds like I just need a souped up Excel spreadsheet to solve this problem. But again, start with the problem. And if blockchain is the right technology or something else, then harness that technology. And then, really, I think I'm going to sound like a broken record if those are still things. But really taking that very obsessive client-centric point of view, right? How are we meaningfully adding value to that end client? That was always something that was super important to me in my private sector role. But I think coming into the Fed and recognizing the mission of the Federal Reserve, which is really to contribute to the economy and to the end US consumer, and our role in the global financial system, I think that becomes even more imperative for me as I think about harnessing the power of new technologies, but adding value for our constituents.
Amazing. I couldn't agree with you more. And I'm going to borrow your term, innovation petting zoo. I will make sure to attribute that to you.
I'm sure I borrowed it from somebody on Twitter, so feel free.
We'll try to find the source of it and give them credit, but for now it's your credit. Robert, thoughts from your side? You've had some amazing comments, so please round us out with what you think, what you are thinking for the future.
Sure thing. I'm afraid my comments may not be as exciting as you might expect, purely because predicting the future is a really hazardous task.
Yes.
It's impossible to exactly know where things are going, and I discourage anyone and everyone from just chasing the current thing or chasing the puck, but rather step back. Think about the notion of future from a couple of different angles. One, things that interest you. Hopefully you get a bit of lucky and you get the timing right, and that very thing, whether it's DeFi or crypto or whatever, ends up being kind of a hot trend and will explode in growth and so on and so forth. Also look at it from areas that you actually could contribute something to. And certainly, other considerations, the societal impact, certain, your moral compass, and so on and so forth. From having said all of that, obviously, I'm privileged to be in a position that not only we could be at the leading edge of research at the Columbia Fintech Initiative, in general, and working with other faculty, but also bringing some of the solutions we build in the labs to the market and actually spin them off and test them out, see what the market response is and what solutions actually are we, of what problems actually we are solving. And two domains that I find quite interesting now would be certainly DeFi is one of them. I think with the very, very early infancy of its domain within crypto, it can certainly be the one thing that would get us closer to mass adoption, although I don't think it's going to be the killer app. No one knew back in the 90s that Facebook might end up being the killer app for internet. Same thing here. Maybe identity it's going to be the killer app at the end of the day, or maybe it will be something that we haven't even predicted. And right. Second, this overlap between machine learning AI and blockchain crypto in general. We're beginning to see various areas in which they are kind of overlapping a little bit. And then I think that also would be kind of a ripe for the next generation of fintech innovation in general, and certainly for crypto in particular. But I echo everything that said by other panelists. It's quite exciting time to be in this area, and I certainly look forward to kind of see what goes on, being very humble and wanting to learn as much as I can, and not thinking that we have the full domain and monopoly on good ideas.
Absolutely. And in respect of people's time, unless Josh or Paul, you have something burning, I'm going to leave everyone with this thought, which is no industry has ever grown without guardrails, standards, and commonality, whether it's the regulatory domain or the technical domain. We need that, and it's evolving in the blockchain space, but we are far from even common language. We're arguing about what broker means in an infrastructure bill. We're arguing about what actual cryptocurrency versus digital assets means. We will get there, but we still have a long ways to go when it comes to standards across regulation, policy, and technical. And so let's work together to evolve this, because it's the only way this industry is going to scale to the mass adoption that we're expecting around the world, or that we hope for. I'm going to hand back over to Michael, and I want to thank the panelists for an invigorating and frankly illuminating conversation. I enjoy these because I always learn myself, and I'm just humbled to be with you all.
Likewise. I mean, to me, this is almost like a meeting between friends during the pandemic that I really look forward to. And it's always such an enlightening discussion. So thank you all. And to you and all of our panelists. I mean, I have to tell our audience just how much easier our job is because of the terrific effort and the assistance that we have from all of our panelists, especially what we have today. Sandra, you've been an invaluable resource. Robert, always a resource at CBS. Sunayna, Josh, I mean, love seeing you at our events. Paul, great to see you again. So I'm going to do an Oscars length closing as quickly as I can. I would love to go ahead and have all of you join us, whoever wants, eat your lunch. It's a casual, informal discussion right after our panel. And I will say goodbye to our panelists. Really hope to see you again soon, and especially in person.